Good morning. Welcome back. My name is Franco. This is Trading Futures Live. Welcome back to this Saturday live stream. I take this live stream a little bit more in a relaxed way. Like I don't feel the rush to just market opening. I'm gonna have a setup, right? So I like to take these Saturdays and do some good stuff to improve my trading. Yesterday, I know market was very volatile, a lot of opportunities. I did miss one very important opportunity, and that went to my missed trades. That missed trade is the first thing that we're gonna do. I want to analyze and try to see what happened, why I did not take the trade, and I found a reason, and I found another reason of why to take that same setup. Okay, because it has happened in the past, and I have some data on it. So let's jump right into this thing. All right, so for that, what I want to do here is the pre-market screen. All right, so let me move this to this way. All right, so we're gonna review the MRCI website later. But let's go here, right? So I wanna do. I don't know if you guys see this clearly. Let me try to move this better. Good morning, Stack. First thing that we're gonna do here, I'm gonna go to my journal, right? Oh, and this is filtered, so I'm gonna clear all the filters here, advanced filter. And here in the basic filters, I don't wanna clear them out. I just want to clear the setup is okay because it is a pullback continuation setup, so I can keep this two filters, right? I have dates and I have the pullback continuation. This is the trade that I missed yesterday. I want to make sure you guys are watching correctly, okay? So this was the area. I did have it in advance. If you go to my live stream, I did have this area, and I even said it out loud. I have 11,273 3/4. But then when this happened, I moved it to the upside, like close to the overnight, right? So I was, in that regard, I was hesitating into put the trade for, I think I found two reasons. Number one is that the ADQD was not completely coherent. Yes, it was very negative. No, not the ADD, the tick chart. The tick chart was not completely coherent. Let's take a look at it. Okay, so the ADQD, it was textbook setup. It was coming down and retracing back up. So that's what I like to short, right? And when I'm going long, I like the other picture. I like a move up and then a retracement back. Okay. Now it was not easy to take this trade for a few reasons. Number one, look how negative this is. Okay. At this point, I'm not watching these red candles and this retracement, right? So it was a very textbook. It was a very good setup, right? But I hesitated. But this one was not the one that made me hesitate. It was this one. If you see here, a low, higher low, it was trying to break the high every time it got to the zero line. And if you figure that the first time we broke to the upside, like consistently, was around 10:15 probably. And at this point, I say, all right, so the retracement is coming. I might have a larger retracement, probably to the overnight low at least, right? Nevertheless, I did have the area and I did not take it, right? So I want to find a reason, right, why I did not take it. And it was this. But I want to find a reason for the future to make me see this setup clearly. Okay, so I found few commonalities of, okay, so here's the other thing. This is the dollar, right? This is what I probably did not pay enough attention to. The dollar. We did have this area. We came here, we bounced back up, we tried to break this thing, but the main idea, the main the core um the core idea of my trading plan is a correlation with the dollar and other assets, right? Like, or even the internals or other markets, etc., right? To enhance my probability. So the dollar wasn't the demand that we put during the pre-market, but I suddenly didn't care or didn't pay attention. Something happened with me that I was not paying attention to the dollar, or given the importance, the enough importance or the enough weight for it to give me the right setup. Okay, so I wanted to know, and I wanted to know because in my trading plan, I make the best effort not to break the rules. Okay, so in me doing that effort, sometimes I'm too tight. Okay, I'm not saying that being flexible with the rules um, is good in a sense that you can break them every other day and then you expect to make money. You need to be tight, right? But as a yo, good morning. But as a um, business person, you need to be flexible sometimes, right? Depending on what is happening. Okay. Um, and because trading is so dynamic, and I know for a fact that it's hard for me to take a short when this thing is doing this. Okay. If it's a very good, if it's a very good trade that I'm looking at, it's hard for me to take a short when the tick chart is doing this. Okay. So I had to go to my missed trades for the last 4 months, right? And I filtered the same setup that happened yesterday. And what I found was, what I'm looking at, right? What I'm looking for, I mean, what I'm looking for is that the tick chart is against me, right here. And voila, I got a bunch of trades. Give me 1 second. All right, so I got a lot of trades, and inside these trades, there were few that were monster trades, right? For instance, this one with one contract was $4,000. So, and even the one that I missed yesterday could have been to $4,000 as well. So, yes, I did find some commonalities, and I'm writing off my plan and doing some tweaks so I can retake um, this trade again in the future. Okay. So the lesson here is this. So the conditions that I had was the trend against me, but it was a very good tick location. So I did not have any changes here, just one trade. And regarding the ADQD, right side of the trade, right here, right side of the trade. Yes, I do add some filters, but the best ones remain, and ADD coherent. Nothing changes here, okay, with the ADD coherent. So there are three conditions that I need at all times if I want to take this type of setup, right? Is I don't care if the trend on the tick chart is against me. I shouldn't care, right? And but I need a good tick location, right? Because if I put a bad tick location, look what happens. There's no winning trade, okay? So I need the exhaustion within the tick. what is the exhaustion within the tick? I'll show you. All right. This was the case from yesterday. I need for this thing to get exhausted, meaning getting a new high here for the day is going to come back because this is the first time. Look, this chart is very cyclical, right? So every time it comes here, it drops. It comes here, it drops. Now, here is even more probable that it will drop. Okay, so I want the exhaustion right here, right? Same thing here. It gets exhausted and then it needs to come back. Okay, this is a very cyclical chart. So one thing that I cannot negotiate is the tick location. If I don't have an exhaustion here, if I want to take a short, I want this thing going very high, okay? Above 500, 600. If I'm going long, I need a minus 500, minus 600, right? Or even a new low for the day, that will be even better. And minus 1,000, minus 800, right? At least on the ADQD. I guess for the ES, the numbers will be a little bit different, but it's the same principle. Okay. All right. So I wanted to review this because I think it's very important for us to know where we make the mistakes and try to correct them, not only technically but mentally. If I have some time today, we can review some things that I got here. We can go and try to map our impatience or patience or boring trading. You guys can just suggest what do you need. Okay, we're a few here, just 5. I cannot trade. One of the reasons I don't trade pre-market is because the tick is closed, because that is an indicator or a chart that comes of New York, the NYSE, right? That comes straight from New York, and that got nothing to do with futures. Futures is being traded in Chicago, and the tick chart is being created in New York. So that's why I said, all right, my core idea in my trading plan is correlations, right? I use correlations with internals and correlations with the dollar and other assets. Okay. Good morning, Emin. Welcome back. All right. We were talking about the missed trade yesterday and what I can do for the near future to avoid missing those type of trades. Okay, and I think the key is recognizing the setup. All right, so let's clear all these. Let's get out of the H1. Differently the other days, I'm not going to download other days on the data and replay. Let's do the MRCI. I know some of you guys were interested in this. Let me see if I can arrange this. Sorry about this. I didn't prepare it currently. Okay. Okay. There you go. Okay, so I told you guys I did a free trial. For 14 days free trial on the MRCI website. You don't need to, but there's a lot of interesting data here that you can go back and look. But what I use for my trading every week is this. So you can go to Google, right? And you can go and type in MRCI futures correlation. And I guess I need to open up a incognito browser. So because this thing probably has my cookies. MRCI correlation. There you go. So, and you guys can see here. You guys can see here the correlations. Is pretty hard to read. Let me see if I can zoom in. There you go. Okay, cool. So you guys can see here the intermarket correlation, right? And you can put 60 day, 90 days, 120 days, 180 days, right? And we can check all these how things change, okay? But let's put the 6-month correlation, okay? You see how here is a little bit more like disorganized, deorganized right here. Like you have a lot of like if you see here the 30 days, it's a lot of more green squares right here, right? Whereas if you go back in time, like more days, you have less correlations, right? But what happens is if you have a correlation for 180 days, I think is a little bit more consistent, and you can check the different days and try to find a better, or try to find a sweet spot for you, okay? But the important thing is that you got here the NQ and the YM. So you got the NQ here and the YM to the left, right? The December contract, the one that we're trading, is 94% correlated, right? Whereas the ES and the NQ is 99% correlated for the last 180 days. Like let's see the last 30 days. Is similar, okay? So the equity markets, it makes sense. They all move in tandem, right? But the one that I'm interested in is this one, the DXY. Now, this is the futures contract for the MRCI. Just Google MRCI .com, or no, Google MRCI like I did here. MRCI correlation. MRCI correlation, and the first one, you got it there. Okay, let's continue on. So the one that I'm interested in is this one, the DX. You see how the DX, this is a futures contract for the index that we're watching. Okay, we're watching the index. We're not watching the futures. So you see here how is on these last 30 trading days is 89% inversely correlated to the NQ, and for the ES is minus 91% correlated. So it's pretty much inversely correlated, okay? But there's this 9% chance, or 9% of room, that the dollar is going to behave differently, okay? So the way I use a dollar, is when the dollar, not necessarily when the dollar is going up, the market should be going down, okay? That's not what I mean with this type of correlation. How I use it is I want the dollar in a high quality area, and I want the equity markets in a high quality area as well, okay? But those areas should be, or must be, in different direction. What I mean is I want the dollar in demand if I want to short the markets, okay? And I want the dollar in supply if I want to go long in the markets. Do you guys follow me? Right? Whatever happens after I enter the trade is not really relevant for me. I already took the risk. I already assumed the risk. So I'm accounting for that money to be out of the account right away. Okay? If the area in the dollar is good, that will cause the equity markets to move in the other direction. And one of the example of that is my trade from Thursday right? Let me clear out this filter. All right, my trade from Thursday, you guys can see how I took the long, right? I took the long, right? And the market, sorry, I took the long here, and the dollar was in supply. Now, what happens to the dollar is that the dollar continued to the upside. It kept going to the upside. Was my trade outside my rules? It was not. I was longing the NQ while this thing was in supply. So what happens, and this is my personal logic, I didn't learn this from anybody. I learned this from Sam Satan, but I didn't learn this way. He was just saying, all right, if the dollar goes up, the market should be going down, right? So I had to figure this thing myself. So what my logic is here, all right, so the dollar is being sold here, that will cause some sort of buying pressure in the equity markets, right? Is that what happens? uh, there's no way for me to know, right? But I do have pretty much a good track record using the dollar, right? Now, what happened later was, all right, we blew the supply, right? And I said, if this thing comes back here and the dollar is being bought, right, in demand, then you will have some more drop in the equity markets. And that is exactly what happens. What happened, this was Thursday. The equity markets went up, and then when the dollar broke the supply, came back to find some more buyers here, the equity markets ended up dropping, okay, for the rest of the day. So that's the way I use the dollar, right? So here you can find other markets. Like if you see here, some currencies are very much correlated to other assets. Like you have the British pound and the Nikkei, British pound futures and the Nikkei. I know this is, I don't trade this, but you can find like it's 89% correlated. So if you, for instance, the Canadian dollar futures contract is 97% correlated with the NQ, right? So I know one friend of mine uses the Canadian dollar, right, to correlate his trading. Correlation doesn't mean causation, right? Because one thing is moving, does that does not mean that the other one will react. It's just matter of probabilities. Okay, so I know one friend of mine, he's a trader. He uses the Canadian dollar, and his logic is when crude oil moves in one direction, the other markets follow, etc., etc. So he has his argument, right? But here you can see how it is actually correlated. Okay, and you can use it if you see a demand or an area of interest in the Canadian dollar. You can assume some degree of probability that the markets will have some sort of demand in the same area, right? And so on. So this is me just trying to tell you how you can assemble a trading plan that will work for you, right? My trading plan, it was custom made for myself, for my psychology, for my personality. Okay, that's what you need to find. Some plan, some sort of trading system that goes well with your own personality. All right, so this is MRCI. And here is another interesting part that I found in MRCI within the paid section, right? You don't need to pay. I just made a 14 days free trial for this demonstration. I used to pay this. I paid it for a year, but I didn't find a like something that will help me in my day trading like every day. So I decided to stop paying it. But nevertheless, there is a lot of things that are very interesting here. So if you see here, you can go to MRCI online, right? And you can find here some charts, seasonalities, etc. Right? But here's the good part. Here's the thing that it gets very interesting. MRCI charts, studies, and updates. Historical analysis. You can go here to futures correlation, right? And you will find here some correlations on the with these historical patterns on the futures market. Okay, so let's say if you go here to the S&P 500, S&P E-mini, let's put here. So I clicked here because this thing is very weird. You can if you just put the mouse above the thing, it opens up the chart, right? So here you can find how the market have behaved in the previous years. So this is the correlation for the past 15 years, right? You have 90.34, 5-year 97.24, 25-year 85.34. So this drop still is not without some parameters, okay? Yes, we have had some shocks, but look at the charts. Look at the historical patterns, right? All right, let's go to one interesting that I found here is the 10-year yield bond, right? If you see here, all right, let's close this one. So it's a weird website. You just put the mouse over the thing and it opens up a chart. So why I do find this interesting, because this one gives you historical data on how this thing has behaved in the years that were most similar, right? More similar. So here you have how the black line, green and red bar candlestick is the current market. So the black line in this case is this 2022. Okay. Then the green is 5 years, is 80% correlated, a little bit above 80% correlated. So it's not like it's not something that is too weird. But here it gives you the years that is more correlated to. So for instance, the year 96. You guys see? You just put the mouse above and it opens up the chart. So years 96 is 80% correlated. Year 92, year 87, 1987, 92%, right? So let's take a look at year 87 and see what happens. Right? So you open up this, you see how the bond behaved in the year 87, right? Look how similar it is to, and I guess this is the yield, right? I guess this is the yield. Well, I found this very interesting for you to see what happened in these years, and you go back to the equity markets and say, all right, this is something that might happen this year, right? Because you got the interest rates, you get the dollar, the same patterns, most likely that the market will react in the same way. Okay, so if you do the 14 days free trial here, I think is a very good resource for you to analyze historical data. So this is not going to be useful for your day trading per se, but it's good to know the environment that we're in. Okay. All right. So one thing before we go to the dollar, I want to show you guys this. I want to Google here. CFTC commitment of traders. Okay. And I know for a fact that a lot of big money and smart money trades off of this data, and they probably have this data a lot more updated. So this is a report. If you go here to the economic calendar and you see yesterday, you guys see all this CFTC, NASDAQ 100 on speculative nets position, gas natural, and financial. All these things that people don't pay attention to and is very low impactful. Some of them are like yellow folders, but nobody really cares. This thing will give you a report, and the cut is made on Tuesday, meaning last Tuesday of this week, and they come out with this report on Friday, so is lagging, right? But you can check the positions of the big money in the futures market. Let's go check them. Right, so the way you go for that is you go here, commitments of traders, right? Type of reports. Oh no, here you can do this short and long formats. Okay, short or long formats. You can go here, natural gas, metal, agriculture, petroleum, financials. So you can click here on long formats. You will have something like this. Okay. I know it's not hard to read, but it's not hard to read, but it's just take a little bit of practice. So here you see the asset or the instrument, Canadian dollar. This is the future, Swiss trade, British pound. So you scroll down until you find either the S&P or the Dow Jones. There you go, S&P E-mini. There you go. So the E-mini S&P. So here it says the consumer staple index. This is not the one that we want. This is the energy index. E-mini S&P 500. So this is for the ES. Okay. This is the one that we pay attention to, the mini contract, right? And here it tells you the positions, how many long positions are there. And this is the dealer, intermediary, asset manager or institutions, leverage funds, other reportables. I think you can you have to have at least $100 million, and you need to report this. If not, you are within these non-reportable positions. Okay. So you can see here. So this report is as of October 4th, which is Tuesday, but they publish it on Friday, so it has 3 days lagging. So on Tuesday we had this much positions, right? Long from the dealers, right? These many shorts. The asset manager, they were mostly long, right? Mostly, and this is the short quantity. The leveraged funds are mostly shorts. You guys can see here how the majority of the contracts were shorts, right? You can see here also the open interest, other reportables, and non-reportables. So it's pretty much the same position. What it gets my attention here is the leveraged funds. They have a lot more short positions than the than long positions, right? So the big money, like the asset manager and institutions, are mostly long. They have a lot of shorts, but it's mostly long. Okay. You have the open interest. There are 2 million contracts opened, and here you can see the changes from 1 week to the other one, right? For instance, I don't know if we have totals here. I don't think we have totals here, but you can see the change from 1 week to the other one. For instance, leverage funds, they were So they closed a lot of longs and they opened a little bit more of shorts, right? And so on. So here in shorts, they cover a lot of shorts right here. And so on. So you can play with this data. You can play with this data and see what is going on in the financial markets. Okay. There you go. On the Nasdaq, you see how this is what consolidated. Yes. So the do you see how the volume is a lot less in the NQ? It has oh, because this is not the one. This is the 100. So we need to go to this one, right? But either way, the open interest is just 272,000, whereas in the ES is like 2 millions, right? But you can see how the leverage funds are mostly shorts here. The asset managers are also mostly shorts in the NQ. That's pretty weird. It's not odd. Like they're more long in the ES, but they're more short in the NQ. Okay. Well, I just wanted to show you that. That's a pretty good tool that I use every other week. Let's say when the market moves big time, like it did yesterday, I want to see what I could learn from this report if I did have any sort of clue on how to correlate this data with what is going on during the week. Remember, this is a lagging report. It comes 3 days after they collect the data. So this one is data up to as of October 4th. Again, you go to cftc.gov. You can Google that trader commitments, futures traded commitments, and it's published for every asset. Okay, every future. All right. So I want to open up the chart here for the dollar and open up here. Trading view. There you go. Let's go see the okay, so we know based on this that the dollar and the NQ is 89% correlated, okay? Inversely correlated, sorry. Meaning 89% of the time that the dollar goes up, the NQ goes down, okay? So I want to check here a few things that we can correlate. And let me see if I can put both charts in the same screen. Give me 1 second. Oh my god. Just 1 minute. Let's put the daily. And we can go back in time. So let's take this, take this. All right, let's start from the beginning of the year. Let's put the date. Let's start from the beginning of the year, right? Because I want to see this like the big picture. Let me close this up a little bit more. There we go. All right, I'm gonna do my best for you guys to watch both charts. All right, if you guys see, this is the beginning of the year, and here is the beginning of the year in the markets, right? Where is it? There we go, here. So you can see how the US dollar was sideways, right? Right here from November, mid-November to February, right? So, and you have here, mid-November is right here till February. But you have the equity markets dropping. What? You got the equity markets dropping in January. So that's how my logic here plays out. Even though the dollar is not moving as of yet, this thing is starting to react, right? So my main idea is, all right, this thing is being bought, right? And this thing is being sold, okay? So here you can see how from February we started just to spike up. We stayed sideways from March 24th to March 23rd. So March 4th, it's right here. So we had the bounce, right? While the dollar was sideways. And then when we started to break to the upside, March 31st, there you go, March 31st, we start to have a larger drop here, right, on the dollar. I know, Stack, you are the most interested in this thing. So the way I use it is I want to see if the dollar is being bought, is being bought in demand, right? And is if this thing is in a good supply, right? You can start correlating this thing for to behave the opposite way of the dollar. Now you see how is not a similar chart, right? And that is the 11% difference on their correlation. It's not the same picture flipped over, right? It's not by any means. You have here like one, two, a triple bottom here, and then a push up, and then here you had just a huge retracement to the upside, a double top, and then a drop. Okay, so for me to interpret this is, all right, I want to have a very good location right here, and here you can prove it, right? Let's see if it works again here. So you have here May 12. You have here May 12. Even though the dollar started to drop, this thing is still dropping. May 12, right here. So it came down, right? Now the dollar started to break down, and this thing was trying to push up, right? Until it found some demand right here, May 30th. There you go, right here. We base for a few more days, and when we finally have the breakout to the upside, June 9th, there you go, we have the breakdown on the equity markets, okay? So I think is vital to see how the breakout on the dollar, we have seen it here, we saw it here, we saw it here, and let's see if it happens again. The breakout on the dollar means a breakdown on the NQ, okay? What else? Let's continue on. So here the dollar starts to move sideways. This is June 13. June 13, the dollar will start to move sideways, right? Up to right here, July 5th. So in this case, you don't have any good correlation here. So the dollar just exploded to the upside right here. It broke to the upside while the market was also moving to the upside. Okay. Now the interesting part is this. Okay. Yes, we did have the move out here, and we came back to this mid-June. Sorry, 1st of July, 2nd, 5th of July move, right? We came here in August. Now, what happened in August, right? August 10th, we start to move to the upside here. And this is when finally the NQ start to retrace back down, right? So is pretty subjective a lot of times. That's why I just summarize everything in, if the dollar is in a high quality demand and the NQ is in a high quality supply, I can utilize that correlation in my favor for my trades. Okay. And since the markets are fractal, you can translate this in lower time frame. So let's go to the 30-minute, right? Let's go to the 30-minute here. Again, you have when was this? I want to see if this drop at 9:30. We could have some clue. 8:30. Well, this is the 8:30. 8:30. Yeah, this is a no-brainer. The dollar just shut up. But look how weak the equity markets were yesterday when the dollar came out to the London demand right here, right? But the NQ did not come back, right? So that means that the dollar was being bought big time here. Hence, we sustain this area and continue to the upside. Okay. Now, I do think 11,360 for this next week right here for the NQ, it's a key level. Okay. And this level is also represented in the other markets. So I think the one that have a better picture is the S&P, the ES. So I think this level will come into play this next week. Okay, 11,360. Probably we have an upside Monday, or even we got pub. Who knows? But this level is a pretty much a textbook setup for us to short. Okay. So that is how the dollar work, and I do like to trade correlations with the dollar. I think it helps me to stay in the trade and to have a nice setups, enhance the probability in my trading. Okay. All right. I don't think if you guys want to, do you guys have any question? I have the Jared books here. I wanted to review some things that I think are very important, right? But for that, what I'm going to do here is, let me see if I can show you what I do on the. Give me 1 second. Oh, okay. We reviewed this last week. Okay, so we redid the ABC games. I want to show you how I do correct my C games. Okay, how do I get out of that state of 1 second, let me see. Okay, there we go. How do I get out of my C game? How do I improve my psychology when I am in bad shape, like when I'm doing crazy things? Yeah, I think everyone has to do his own work. Like this is very personal, right? And you need to understand. You need to get familiarized with the charts. You need to like treat them like your child, like your child. You need to learn how it behaves, right? I know when my daughter is behaving good, behaving bad. I know when she is like tired or she is like needs to go to sleep. That's the same way I see the charts. That's why I don't trade but the NQ, because for me to trade other ones, I need to go have a lot of screen time in front of the ES or the Dow Jones. I'm actually terrible trading the YM. I think my percentage of winners is like 10%. It's hard for me to win on the YM. I just don't see it. Okay. I got so familiarized with the NQ. I would say like 30% with the ES. If you tell me, find me an area in the ES, I'm not very accurate. I need to have a lot of more hours in front of the ES chart and learn from it, like see how it behaves, right? All right. So so uh here's one thing that I came with from the Jared's book. um I do ask myself some quality questions when I am trading very bad. Okay, and here's the things that I do. Right, when I get early signs of a C game, there is a strategy to be applied. All right. Number one, maintain the sense of urgency. There has to be a priority to work on my psychology above anything else. Okay. Um, Ask for help to any of your friends to guide you when in this state. Okay, I do think, even though I do think trading is a very very personal discipline, individual discipline. I don't think a trader can do it by himself alone or herself alone. I think there is some help that you can use. For instance, if you know you are not in your best state, but you cannot get out of the charts, you can keep trading. You want to keep trading. There's something that is more powerful than you. Is your subconscious mind doing things that you know they are bad, but there's no way for you to turn off the platform and walk away and just wait for till tomorrow when you're in a better state. I know what is that. I know what is to be in that state, right? So that's why it's so important to have someone until you're trained enough and you understand subconsciously that doing crazy shit is just detrimental for your trading, right? Not only for your trading account, but for your mental account. So you need help. You need someone to pull the plug, turn the computer off, or just try to make you get back to the right state of mind. Okay. Number two, map the desperation. Right. What are the signs for you when you are desperate? Right. Meaning, for me, um, I lost a very little trade, meaning $200 or $50 or $100, whatever is the amount for you, and you immediately try to open up a new trade, right? Regardless of if there is a setup or there is not a setup. Okay. You just want to be in the market. You don't want to be out of the game. You want to be in the game, right? That's one sign of me doing the wrong things. Okay. Recognize your early signs. Like I've said, a overreaction towards a very loose, like to a very small losing trade. The overreaction is the first sign for me to, recognize that I'm not in my either B or A game. I'm in the C game. And my early signs for me, if I lose a trade, I feel the throat, some sensations here in my chest, my shoulders. I feel that I want to kill somebody. Okay, that I want to just smash the computer to drain the energy. Right. So that's a sign for you to just stop. Okay, don't do it again. Don't keep trading, because if you keep trading, you're risking a lot of things. Okay. And I know this is assumption that the majority of traders have. They think if they lose a trade, a lot of things are in the line. Meaning, if I lose one trade, either my family will criticize me, my friends that told me a year ago that it's impossible to make money day trading, all those beliefs are reaffirmed, right? When you lose a trade and you have those thoughts, right? So first thing I try to do is just get rid of those limiting belief regarding trading. I used to watch these guys that say that day trading is impossible to achieve, and I will tell you the truth. It's nearly impossible, right? Because statistics demonstrate that 95 to 98% of people just fail, okay? But in the other side, I will tell you that in other professions, for instance, in real estate, right? There's somehow the similar statistics, like 80 to 90% of realtors, they don't make it, right? They think they can make it, but they don't put the necessary work and the time. And no worries, Taurus. Like, we're talking a little bit of psychology here. So I'll tell you, the statistics are not helping in feeding your belief that you can make it in day trading. So first thing you need to do is try to believe that you can make it, right? And believing that you can make it comes along with doing the right work, like doing the effort, like doing the boring work, doing the back testing, doing the things that will not give you a spike on dopamine. Okay, doing things that are boring, like back testing, like logging your trades. Like you can curse like, damn, I had 10 trades, right? And I need to log them in. So what I used to do is that I was cheating there. So I downloaded my data and I exported it to the H1, right? A few years ago. And I just put standard setups, standard stops, and standard targets. So I could have data. But that data is so bad. It's flawed. It doesn't give you anything. Okay? So that's not the right work. The right work is trade by trade, logging in, analyzing, thinking, right? Interpreting what you do and how you can do it better next time you trade. Okay? So so that's why you every time you lose a trade, all those limiting beliefs can come up, right? And really hurt your trading, right? Really make you do stupid shit because you get desperate. You think, all right, I cannot make it, and I lost a trade. So that limiting belief is reaffirming you that you will not make it. Okay? But I ask you sincerely, like truthfully, are you doing the job? Are you putting the work? Are you doing the back testing? Are you, and I can assure you, you probably will are not doing it. You guys or one trader, you're not doing it because if you do it, you need to see improvement. That was what happened to me. Okay, I was frustrated, squared. Like I was very bad. Okay, I was really bad. I couldn't handle a little loss, $100, 200. I just wanted to. I was so sensitive, right, from the accumulation of losses and just doing stupid shit. Okay. All right. Set a strict daily stop loss on your account. If you guys, like you guys know, I do have in my Ninja Trader brokerage account a stop loss of $800. If I hit that stop loss, the platform would not let me keep trading. Now there are I would say probably like 9 to 12 months that I don't hit this number, minus $800. If somehow I hit it, I will not be able to continue trading, right? So that is my software putting the block for me. Okay. Yes, I probably will be mad or frustrated, but I will have till next day to reaccommodate and right and bring my psychology and my state back to normal to do good trades. Book wins. Try to get only textbook setups so you can get in confidence back. Yes. So every time you come from a bad trading day like the one that I had on Wednesday, in reality, I did took two good trades. Even though the first one was a good trade, I was triggered on the stop loss. Okay, I made a mistake putting the stop loss where I put it. That's okay. I made a mistake. I lost the trade. Right. The second one was the same trade. I was making more than 1-to-1. Moved my stop me at break even. Okay, but the third and the fourth trades were counter trend. Right. The setup was not there. It was very it was very improbable trade. Location was bad. Like too many signs for the trades to that was going to fail, but I took them anyway, right? I wanted to take trades, so that's part of my C game. So next day, I want to come with this attitude. Okay, I make these mistakes. I lost control temporarily, right? I didn't blow the account. I didn't do like something that will hurt me mentally a big time. But today I want to have my A+ setup and my A+ setup only. Okay, why? Because I need to feel confident. I need to feel confident. I will say this one more time because I always repeat it. Confidence is not confidence that the next trade is gonna win. Okay? Confidence is you executing properly. You feel confidence that you will execute your plan properly. The outcome of every trade is simply random. 100% random. My next trade on Monday will be 100% random. It can win, it can lose. Now, I have a plan. I know if I execute the plan properly, I will make money in X number of trades. Okay? All right, I have a message of Taurus. Not doing the hard work, ignoring the important work. Yeah, people need to slow things down and being realistic. Yes. I had a really good week this week and kind of far Monday. It was like 18 R for the week, 18 MRCI. I acted enough daily risks for the day and then double. Then I did a gave back our Friday. Not proud. Okay, I understand that. Look, and I relate to this so closely because I'm gonna go through my data because I'm about to close this live stream. But next Saturday we can review my data. A year ago, I would have a good month, entire month, 19 trading days, and in the last trade of the month or the day before the last trade of the month, I was desperate to get the 7,000, the 9,000, the 8,000 goal for the month. So I was short, or I needed a little bit more, and trying to get that little bit more, trying to try to go from the back door or try to cheat, try to shortcut to that goal, I was screwed my entire month. Okay. And even though I am not proud of that, I learned how to stop doing it. Okay. And how do you learn stop doing it? You change enough and you do it enough times until you stop doing it. Okay. You need to force your body. Remember, the mind is one thing, but the subconscious mind is the body. Even though you think you want to do X today, your body is going to end up doing what your subconscious mind is leading to. Okay? So you need to do things um too many times so your body gets accustomed. It gets ingrained in your subconscious. So I know the YouTube has hurt me in some ways, but had helped me in other ways. Okay, and I recognize that. Sometimes I get nervous. Yesterday I had 43 people. Right, I had a couple of guys just telling me, okay, you're not taking trades. I made X and I make X, and I know those things don't help me, but it's hard for me to just miss those messages. Okay, I'm new at this and I want to get better, so I pay attention to all the messages. Um, but I know on Monday I need to focus myself in trading, right? If messages are coming in, I need to ignore them until my priority, which is trading, is already set, is done. Okay, so the way I look for improvements in my personal life and in trading is, all right, what happened to me today and how can I change that for tomorrow? Okay, the same thing is in trading. I did it. There's no way to turn back time. I already did it. I've said it here. I don't know if this video was last Saturday. One day I lost $40,000. One day I lost $40,000. I'm not proud of that, right? But how can I avoid a $40,000 loss in the future, right? Um, okay. Look, Taurus, for me was the monthly goal and I needed to pay bills. X. You can put any scenario. It was my monthly goal and I wanted to get either achieve the goal or I already achieved the goal, but I wanted more. I was greedy. So we're all bad attitudes to have because when you are in need of money, when you're trading, meaning that I need to make $300, for me is very detrimental for my trade. I'm just gonna execute my trade, and I'm gonna try to do it the best way I can and focus myself in the process, nothing else. The process. Because yes, I'm trading. Uh, let's say my risk is between $200 and $300, but my end goal in a year or two is risking $5,000, right, or $2,000, where I can make $5,000 trade, $3,000 trade. That's my goal, right? I'm there. I'm not there yet. I need to work for it. I need to work on my mindset. I need to work on my mentality. How can I make $5,000, right? If I'm not ready for it, I cannot even. I cannot handle a $2,000 risk. That's not me now, right? And that is gradual work. And when time passes, more time I risk 300, the more comfortable I will feel with it. More time I risk 500, the more comfortable I will feel with it, and so on until I get to 2,000, 3,000, and sky is the limit. Okay. Um. Yes. Yes. Correct. Yeah. Looking the PNL is so bad. Looking the PNL is so bad. I just have the PNL on the screen because I want to show my accounts, but I try to avoid it at all times. I just even when I put trades, I put number of points that I'm making because Ninja just have a default setting. There's some people that have the amount of dollars. Uh, there I cannot. I just learned that too. Like watching the PNL is so bad. Yes, like yesterday for me, I missed one opportunity. It was the trade. It was a good trade. And after that, in reality I did not have any other entry opportunity. Um Not because they were not for my trading style. I bet a lot of people were making tons of money yesterday. For my trading style is probably it was probably a very limited type of day. Okay? Um and I get that probably my trading plan is not perfect and it will evolve with time. I would make it better so I can profit from any type of trading environment. But that comes with time. Like it comes with more work. It comes with more consistent um, behavior in trading. More like um, I got to this plan because I was so bad trading that I needed to notice what I was doing, right? Until I noticed what I was doing and said, all right, wow, every time I do this, this works. Okay. Every time I do this, this works. Now I have the plus that I record now my missed trades. So I see a setup. I didn't take it, but I'm recording it on the H1. I'm putting it there. I'm studying the chart, so I'm learning constantly from the trades that I didn't take. So I think I am collecting more and more data, so my mind, my subconscious mind, can pick up those opportunities live while I'm trading. Okay. Yes. So yesterday I was feeling a little bit like the other day, all the days that I took trades that were not good. Like, damn, these people are spending their time and appreciating my work and spending then time, precious time, watching me, and I'm not even taking one trade. But I opened up the channel for my own accountability. So my own accountability is the number one priority here, right? Because even though I'm a trader, I can screw it up at any time, right? So you need to be aware of that. Is what is guaranteed is your C game. You screwing it up. The B and the A game for me, I need to put some effort until they're natural, right? Um so sometimes I think, all right, I need to take trades to show people that it is possible, but that's not in reality what I'm this for. I need to show people how the process work, right? And more importantly, how the process will help me in the long run, in the future, right? I will only be a better trader if I follow the rules. If I just chase price, feel FOMO, and try to jump in, that's very negative. And I know people don't appreciate me waiting for a trade, but that's just me, uh, like telling myself and you guys, look, I don't have opportunities. I don't want to just screw it up and jump in and take a risk that will just um, be bad for my future, right? Of course, and you can tell me, and you can tell me, look, yesterday you just click sell and you could have made money. So if I click sell anywhere, I could have made money, right? But that will not happen. We won't happen. We won't have a 4% drop in the NQ every week, okay, or every other day. That's not how it works, right? Um. So yes, I do. Thank you, Adam. I do a big effort. I do a big effort just to be very patient, because impatience and trading, they just not go hand in hand. Okay. And I know a lot of traders are very aggressive and they trade momentum. But if you go back to the chart, because I've been doing this since 2017, if you go back to the charts and go look 2019, NQ could spend the entire day in a 50 point range. Okay. How do you trade momentum in 50 points range? Okay. Yes, right now volatility is another environment. I do agree, but you need to train yourself to do this for in the long run, right? You don't want to train yourself to do this when the VIX is only above 30, because if you see the charts, the majority of the time the VIX is below 20. Okay. All right. So I do appreciate, guys, your messages. I really do. I'm trying to build a community here. Like I've said, this channel is authentically was it was created for my own accountability. Period. All right. So take aggressive action towards towards the early signs. Learning how to identify the C game. Oh yeah. What I mean here is that when I'm feeling, for instance, the other day I failed to take this step. The other day I came here, I sat down, look, I didn't sleep well, I'm feeling a little bit weird, and boom, yes, I took one good trade, and then the third and the fourth, they were trades that shouldn't be there. Okay, they were not something that really hurt me in my account, but those were mistakes that I could have avoided, right? So next time, pay more attention to the early signs. If I didn't sleep well, if I had a fight with my wife, or I had to come here rushing and do things very rapidly, I didn't do my routine, and then I'm feeling like stressed out before trading. Yo, calm down, take your time, find a way to get in the right state of mind, and that do the thing, right? I'm gonna take a trip in November, right? Most likely, I won't be trading. I probably will post one video. I will do probably the pre-market or the live trading session, but I won't be trading. I will not be in my house. I will be in, I will have another internet connection. I won't have my computer. I won't have my setup. So those are signs for me to, okay, how good can you be if you're not with all your resources, right? With all your state of mind after taking a 5-hour plane and so on. Okay, so those are things that with time I've learned. Uh, Probably not in the upcoming years, Taurus. The uncertainty now in politics, economics, geopolitics. There are too many things going on right now, and I do get it. The pandemic just screwed everything up, but at some point, I think so. Yeah, probably in 5 years, we will come back to very low volatility and boring trading. This period, I'm doing my research. I think this period is close to the 90s, right? It was very volatile market. Every day was going up and down or whatever. There were a lot of opportunity, but I do think this is the best opportunity to learn. Like, the best opportunity to learn is when the market is really doing this thing coming down, because you can prepare. You can prepare. Like, I started learning in 2017 when the market was just going up, and I was not learning the right way. I was just trying to follow the trend. Right now it's more like challenging. All right, I think correct self-criticism, perfection is one thing that really hurt me. Trying to be perfect in trading is and I can demonstrate it with the trade yesterday. I was trying to be perfect with my setup, and I had one thing they're not aligned, and I didn't took the trade, and the trade ended up working. This thing is so um random, right? You have to learn how to be flexible up to one extent, right? One thing that I do not negotiate is the amount of money that I'm risking, right? And the amount of money that I'm willing to lose in a day. Those things are non-negotiable. You can be there like a rock, period, right? But there are other things in your trading plan that you have to be able to adapt. Okay. Yeah. Well, we'll see. Um, Also, the more the market goes up, the more points we will have, right? Before, when the ES was between 1,000 and 2,000, the daily range was probably 20 points, 25 points. Right now, you see 50 points up to 100 points, right? Obviously, if the NQ goes to 20,000, then yes, you will have movements of 200, 300 points, right? It's a lot more volatile when it's a lot higher. But when I was saying 2019, I think the Nasdaq was around 9,000, 8,000 probably. So that's why. Yes. So yes, in percentages is obviously more points. All right. So, well, guys, I think this is it for me today. Thank you for being here. Thank you for spending part of your Saturday here with me. And I'll see you guys back on Monday. Okay. Have a nice weekend and enjoy with your families. Okay. Later. Bye bye.